Let me share my screen here. Entire screen. There we go. Okay. Hi, this is Finance and Investing Just Joey style, and I told you this is gonna be a journey. You're going on this journey with me. This might actually change here during this video. Who knows how long this is gonna be? But I wanna go over my account a little bit, and I wanna show you what I've been doing and what I've been thinking. I've had a lot of reflection today, and yesterday I put out a live stream with my trading guy. Shout out to Shades Trades. And then afterwards we talked, and he gave me an analysis on what I've been doing. And yeah, he gave it to me straightforward because there are some things that I need to work on. There's some things that I need to get a little bit more disciplined about. And like I said, I told you this is a journey. And I know what I'm doing in the long-term investing, but my short-term trading, I'm still in discovery mode. I'm still figuring out exactly what I want to do. And I made some points up on my board over there today. And I'm looking into getting an actual trading regiment, rules, sticking to them, tracking it, because I kind of slacked off on the tracking a little bit, and that doesn't fly. We need to be diligent about, well, I need to be diligent about what I'm doing. Um, yeah. So there were some things that he said that were pretty blunt, pretty straightforward, but that's exactly what I needed to hear. And yeah, there was one or two things that I didn't agree, but I have a different way of looking at it in the fundamental sense. So we'll see if I'm right, but nonetheless, he was very spot on with what he had said. Now, I want to go over some of my positions, and I'm going to be changing some things up because I want to trade in a more long-term fashion. The wheel strategy, selling covered calls, doing it the semi slow way, the safer way, a way to build up over time and not be stressed about it, to just kind of enjoy it. So I'm going to still play long dated call options, but I'm going to be allocating it differently. And I'm down pretty significantly hard on some of my positions because now this one actually was entered at a good time. Uh, I don't want to enter that right now. We'll talk about that in a second. Anyhow, um, I'm down pretty good on some positions. These ones is because I didn't enter at a good time. I didn't do a technical analysis. I didn't. I did a little bit of analysis, but it was more. I had the money. I liked the company. I bought the option. Q4 was going to do well. That was my analysis, but I didn't do an in-depth analysis to get a better a better entry into the trade, because that's what it is, a trade. So I've been kind of doing my trades like I invest long term. And I have to separate the mindset from the two. And that's where I'm getting confused. Um, so, yeah, I'm going to be doing my trading a lot better. Now, I have decided to keep hold of these options. They are obliterated, they're worth very little. They've lost, I think, 85% of their value. That stinks. I'm down almost 3K on this one. I'm down 3K on the other one. Where's it at? Because these ones I bought a while back. These ones I bought back in July. I'm down 4K on this, so there's 7 grand down. That sucks, and that's because I didn't do a proper job on the analysis of entering the trade and seeing where we were in cycles. And I still wouldn't have guessed that MSTR was going to drop that far. But if I was going to put that much money into options, I should have played it over a longer period of time. This one was played a while back, so we'll get there. I got plenty of time on it. Um, this one was actually played during a good time. This is only 6 days old. I bought this 6 days ago, and then there was absolutely no reason to show that we were going to drop like we did. So this was a good entry. But as you can see, I've lost 3 grand on this in 6 days. But like my trading guy was talking, me and Shades were talking, there was no reason because even on Monday or Tuesday, I thought about taking some profits and some stuff, but there was no reason on the charts to even do it. So this is just the misfortune of the market. That's just one day. But since I opened it over the week, it just fell. And then obviously, Friday just was awful. But yeah, here we are. This one I'm not worried about at all because this one's a fresh trade and it's got a very significantly lower strike. This is $200 lower than the one and $140 lower than the other. And then I have another one that's longer out. So this one I am not worried about in any manner. This one is closer to the money. And over the next couple of months, I still believe that this trade is going to come back. So that one I'm not concerned with at all at the moment. This spread, I have 3 months for it to play out. I think I'm down a little bit on it. Yeah, I'm down 30% on it. It's kind of a higher spread. But once we get back into the 400 range, and we have till March to do it. Where's my expert right here? We have till March to do it. I'm completely confident in that. I'm not sure where I'm going to be taking profits on it. I'll have to do an analysis, but probably closer to $1,000. But we'll see. We'll see once we get closer to the $400 range what this option looks like, and then we'll go from there. I'm not concerned with it, like I said, with the time that we have. This one, I actually went out and got a loan for this one. Yes. Am I down 6 grand? Yet again, timing was terrible. I should have paid more attention to that. But I'm showing you that I learn along the way, and when I make my mistakes, I'm man enough to put it out here for everybody on the daggone internet, and not too many people were doing that. So my investing is on point, and I'll show you that at the end. But my trading needs some work. So don't fully follow me on trades right now, unless they're selling options, because that's what I'm good at, and that's what I'm going to stick to. And I'm going to be working to get my account back to where I need it to be to manage it well over the next 3 to 6 months, and then play what I actually know better over the next 2 years, and then also learn how to trade better with Shades. But yeah, I bought this back on 723, down again on it. Entry would have been better sooner. Like now, geez, if I had just held off and not done anything, I could have brought twice as many options. But here we are. This one I'm not concerned with at all. This I still have what 10 months, 8 months, 8 months on this. I'm not worried about it. This is a 450 strike. We've already been to 450. We've got, I mean, Bitcoin. Bitcoin is just amazing, and I'll explain that in a minute as to what my overall account looks like and why it looks like this, and why MSTR is my biggest position. But yeah, yet again, I've got 500 strikes that are expiring in January that I'm not fully worried about yet. Once we get to late November and we haven't really seen any upward trajectory, or if things aren't looking like they're going to be working out, then I've got some decisions to make if I need to take some losses on these. These are definitely riskier trades, but I'm okay taking the risk. Like I said, this is a strategy that I'm trying out to see something. I don't think anything's going to work out this week. Both of my BMNR spreads, they're still up a little bit. I think I only paid about $1,000 each for them. Spreads are definitely less volatile. Yeah, I'm still up 15%. Now this is BMNR, but they're also not as profitable. And you have to play the strikes, the spreads well. So I don't like to do them as much, but they're a little bit safer, and I could implement them a little bit more. And they did work out well on my AMD ones. Also, my Mara ones worked out very well. where am I at? Oh, and then my last options that I'm looking at here are my BM&R. And I bought these ones. I'm going to hold these for a while. Oh man, I wish I would have had those on the 2028 dates. Well, I might be taking profit on these a little bit sooner than I thought. I thought these were 2028s. But anyhow, I paid about 2 grand. I think I'm still up pretty good on these. Yeah, I'm still up 40% on these. I'm in a good position. I'm in a good place for BM&R. I think BM&R can still come down. We're going to analyze that in a second. But I'm going over my account, going over my positions. I had an average cost of $2,063 for each one of these. So what are we at? 61.89. So I paid $6,189. I'm up almost $2,500 on the position. So I'm happy with this. But these, I plan on holding these for a while. I do believe that there's going to be a big pop in Ethereum and BM&R as well. And I think, especially getting towards, we'll see the first half doing well. I think there's going to be a quarter when we don't really do well next year, but I don't know. That's just what I'm guessing. And because we're going to have some volatility, obviously, there's been a lot of turmoil with this administration. Not turmoil, just a lot of changes. So I expect volatility next year as well, but I definitely think that Ethereum is going to do very well and it's going to weave into the traditional finance system. And as Clarity Act goes through and these banks and institutions and sovereign wealth funds get into things like Bitcoin and crypto, they're going to really run these. These are the top. These are the top ones. So BM&R, even though it's a very, very new stock, I've got very long dated options on these because Ethereum has a 10-year track record since it was created. So its network has been running for 10 years and has never had 1 second of downtime. So that's very important to traditional finance to find systems that are reliable. Swift system is reportedly 100% working on Ethereum layer 2, so it's running off Ethereum's network. There's a portion of it that they're implementing on Ethereum's network for sure, has been confirmed. So Swift is the payment system that does all payments, and it's ancient. So when you compare the ancient financial system we have now to anything in crypto, anything, the worst and the worst, the slowest of the slowest, which what a lot of people in the crypto world think Ethereum is, it's like a dinosaur, is astronomically faster than what we have implemented now. So Ethereum is going to be reliable and faster than what we're working with. That doesn't mean that something isn't going to take market share from it on the Swiss system. The Swiss system is big, so there's going to be multiple different networks that take a portion of it depending upon what people want or need. Excuse me. I'm out of water. So I'm very bullish on BM&R, and there's no overhead with this company. There's all they do is buy Ethereum, and Tom Lee runs it. I looked into some of the sources where they buy Ethereum and things like that, but I'm still getting more data. But Tom Lee is the best analyst in the freaking world. My golly, he is absolutely amazing. So this is not an unsafe bet to me. Is it risky? Sure. It's not speculation because I just showed you that we have 10 years of the top analyst who is chairman of the board of this company and 10 years of Ethereum's network running and what it does, and it's also getting another upgrade in December. So I'm just putting those two together, and Ethereum's great, Tom Lee's great. Combine them, it's more than likely going to be great. And I think by January 2027 into January 2028 with the other options, I've got a real shot of these being worth a significant amount of money. And I also expect some hype as well in this stock. And look, we got the late night markets already coming up. And yeah, we're already starting to come up a little bit. We're going to be choppy. I figured we would, so that's good that you get to see this right now. But I meant to say it earlier, but we were talking through the video in my network and trading um, people. We decided that yeah, we're probably going to have a pretty decent recovery. Now, people we're not going to be right out of the water right now, but I don't think we're going ridiculously lower. We've already had bad tariff stuff back in April, and we came out of it just fine. So one more tariff on China, I mean, come on, it's not going to be the end of the world. So I think buy this dip. But I'm gonna talk about these positions real quick. These ones I have limit orders to sell at 3,000, so I'm looking for a triple on those. And yeah, there's some pretty. There's a year and a half's time on that. As you can see, that's what I have up here. And then that call, I want to sell it for about 5,900. It was just for a short flip, but I might change my mind if I see this starting to rip, because MSTR is going to come up above $350 for this thing to even start even being considered. Where it is, our what is it? There's 360, yeah. So I'll pay attention to that option here in a minute, or here over the coming weeks and months. But what am I looking at? BMNR. So BMNR right here, I got three more options: the 50, the 55, and the 60 strike. I thought I had 7 of these. Oh, I do. I have 2 of these. So I have 7 in total, and 4 of them are out till 2028. And I do have a price prediction of somewhere around $150 on BMNR, but that's basing that Ethereum runs like a champ sometime in the next 6 to 18 months. So it's a long dated trade. These trades are going to be held, even though I'm up on them. I'm up, well, this one I'm down 10% on this now, but that's not big. These are options. They're going to swing up and down. But that's why I have so much time. I mean, look at this 2.5 years' time. There's a lot that can happen in 2.5 years. And if there's ever a point when BMNR is probably above 300 a share and it doesn't look like it's going to be going much higher, I might take some profits on something like this instead of holding it out until the contract. I don't plan on buying shares with these. I plan on taking the income because it's the growth in the account. Although one of them I might decide to buy 100 shares of, depending upon how other trades work out. Now, let's get into the fundamentals. So I always like to, dang it, I can't, oh, I don't know how to change it on here. Let's see here. I don't know how to change this. Anyhow, but what we're going to do is we're going to look on the left side of the screen, because this is what I teach. This is what I preach. And this is how I look at my account. And I have to be a little bit, no, I'm sorry, a lot more diligent on margin. But yeah, I am taking some big bets on this quarter because I've done a lot of research and I got a lot of faith that the next 3 months is going to do extremely well. So I've put some extremely big bets in there. I don't recommend it because it is risky, but I'm willing to take this risk. Now, my margin, my total margin is $40,872. I'm using $40,130. I'd like to only be on 50% margin. So right now, I need to either relieve $20,000 or make $20,000 to get back to where I want to be on my margin. But here's the thing: MSTR has a big play in what my margin is. So let's pay attention to this number right here, the shares on all these companies. This is just a trade, so don't pay attention to this. I think it's going to do well over the coming months as well, but we'll see. And I'm working on a trading strategy to look at charts better so I can get to better entries. Anyhow, so as MSTR rises, now this isn't going to reflect fully on here, I can get more and more margin. And the more shares that I earn and own, I mean, this was at $450 not all that long ago, just a couple weeks ago. So I can make another $140 a share on 165 shares. That's like 20 some $1,000. I don't know where my cell phone is to do. 1 second. I'm going to show you why I'm not really that concerned with my account, but this is what I do, and it doesn't matter to me because I know what I own. 165 times about $141 a share. So my account will go up $23,000 when this gets back to the $450 price. Hi, buddy. You want to come over here with me? There you go, bud. Hi, Gizmo. All right. So, and then as this rises, so does my margin requirements. So I'll have more margin because my stocks will be worth more. And then I plan on stacking shares of MSTR. I have written down on my board that 200 is my total share count that I want to be at for sure, and I can be satisfied with that position long term. And in March, I only had 101 shares. Now, recently, I have bought 10 or 12 shares. I'll have to look it up as a trade. So I plan on taking profits somewhere between $360 and $400. And that should, I mean, look at this. It's already back up $10 from Friday. This stock can move. The stock can move $10 pretty quickly. So I might sell some of these shares and I might keep some of them shares because Bitcoin is the greatest asset in the world. Michael Saylor owns more of it than any publicly traded company, any treasury company in the world. Sovereign wealth funds, I mean, the United States of America might beat him. BlackRock, I think, has a little bit more than him, but it's the greatest asset ever. It's anti-fiat. It's a wonderful network. It's changing lives of different countries. It is going to be the backing of the new financial system. It's just wonderful. And then what this company does with AI to make traditional financial products that appeal to people that don't want any Bitcoin exposure creates them a cash flowing giant. It's insane. So this is the best company ever. So I probably will take a little bit of trade or a little bit of profits on this just so I can get my margin down. That's responsible for my account since I'm getting back to 50% margin usage. And then as I get below 50%, that is the money that I can use to make certain trades. But yeah, back in March, I only had 101 shares. And now, yes, some of this is on margin, absolutely. But Bitcoin, this company, my research, everything is pointing to me that this is going to go in an upward trajectory. And everything has said that since he's taken over a Bitcoin standard and become a Bitcoin treasury company. And then it's pretty much the same story with BMNR. It's just a different time frame. This is 5 years later with a different asset, Ethereum. Completely different than Bitcoin, absolutely, but it still has a great use case. So I'm getting into this stock more and more as I find it in prices that are appealing to me. And yeah, I mean, this thing's gone up from the 30s and held in the 50s, and it's been staying there. So it's got some strength. Now, we don't have a lot of data on it, but it's okay. I decided to take myself up to 100 shares of SoFi so that I can start implementing my long-term strategy. I did this, I think, a week ago, and now I'm making, I don't know, roughly, what did I sell that covered call for? $80. It's SoundHound. This is SoFi. Yeah, $80 credit. It's currently worth 63. You don't have to worry about that. These ones I'm just taking to expiration because this is going to be monthly income. This is renting out my equity. So this is what I do, and this is what I teach for the long-term shares. So as we build up, and then anytime that I make a trade, I take 40% of that trade and I buy long-term shares with it every time. So that helps me build up my long-term shares even more. So even this, when I sell this covered call, this is technically a trade, and I'm renting out my equities. So this is like having real estate and putting up rent for someone to live there for 30 days. Well, I rented out my shares and said, hey, I'll sell them to you at this price if it gets there by then. And if it doesn't, then I keep the money. Now, if it does, I'm probably just going to change the contract, fulfill this one, and sell another one to somebody else so I can keep doing it forever. But right now I'm making $80 a month off of SoFi stock, and its current price somewhere around 27, 26, 27 bucks. $27. So on $2,700, you can bring in $80 a month to your household. Now, I mean, we got to pay taxes on something like that, but this is how I look at this. And this is how I'm going to be building this account up. This is what I started doing 5 years ago, and then I stopped doing it because I'm an idiot. We make mistakes, we learn, life happens, we get back into it, we get out, but I'm sticking around because I've seen this work so many times, and I want you to have money. So anyhow, $80, we need 2,723 bucks. That's literally a 2.9% return in a month. If we get that every month, that's 35% a year. That's a very significant return on your account every year. That's just selling covered calls. So I'm getting an additional, well, roughly $960 a year just because I have $2,700 in collateral. Now think about this. Think about once I get to 200 shares and 300 shares. 300 shares will give me closer to $240 every month. Now the premiums aren't going to be the exact same all the time, but this is just a ballpark. Even if they go down to 50, we can start bringing even just $50 a month in, $100 a month in, $200 a month in. As we're building these equities up and as they're being built in the background of our life, and then we just go in here and I'll show you exactly how I do it. And I'll show you what to look for. Oop, too far. But I'll show you how we do it and what to look for. And that's what I'm doing. Like I'm stacking shares, stacking shares, stacking shares, stacking shares, so I can eventually do this with everything. Now I don't do it with MSTR, and I can do it with my contracts on BMNR, but it's a little risky, and I just don't want to mess with it at the current moment in time. But I will be doing it as soon as I start getting a little bit better at charting. Oh, but what I want to show you is what I'll do is let's say I just have 100 shares right now and I haven't sold a covered call. Now, usually when I'm looking at a weekly sell, I'll look at the monthly chart, but here I'm looking at the 3-month chart. So what I notice immediately over the last 3 months is these two tops. 28.45 and almost 30 bucks. So that tells me in the last 30 days we have not gotten above that. I can even go out a little bit farther and see what's going on for the rest of the year. This thing's been on a heck of a tear. So that means this thing looks like it can run if it continues. Just even looking at the sentiment. I don't need lines and charts and all that happy stuff to sell a covered call. I can go in a little bit deeper if I want to. I got a couple of lines that I use. But when I'm looking at monthlies, I'm usually looking at about the 3-month chart. And we don't really need the 13. And we don't really need the 5. It's too cluttered. 200 or way above it. So that means it's doing well. We can use the 50. We'll use the 50 on this longer term chart to see, because it's kind of bouncing off the 50. So here's the top of the Bollinger Band. As you can see, that $30 mark, that's pretty close. Unless we got some really good news coming, I don't see SoFi getting really much above $30. So a $30 covered call over the next 30 days is actually a decent sell. To me, that's still a little bit risky just because on the technical side, yeah, but we know that this thing can pop too. But we also don't want to ignore our technicals. But I also want to go a little bit more safe. So even though we look and see that 30 is the top, we've been making all-time highs dang near all year long. So we could continue that trend as long as we stay in this bull market, which I don't see why we wouldn't. So then I come out to the chart or the options chain, and I'll look somewhere around 30 days out. So I'm happy choosing either November 7th or November 14th. I'm just going to go with November 14th just because. And I already said that a 30 delta, or I'm sorry, a $30 strike was pretty good. We might not get there. But I want to go a little bit safer because I think this is going to rise up a little bit more than $30. And I still like to play around a 30 delta anyhow. So I'm looking at like the $32 strike. That gives me $2 more in upside appreciation if I sell the shares potentially. Or also, it's also paying $118. And then if it does rise above this, I can even roll higher to keep my covered call going on. Now, if I'm really concerned, I probably would go like this can be volatile. We're in a very volatile thing or month, time, tech, everything. It's volatile out there all over the place. Volatility. So I'm even comfortable going the $35 strike. It's a nice round number. It's got decent volume. Implied volatility is, it's high, but it's not terrible. Open interest, 20 delta. So this is very, very unlikely to happen. And we're still going to collect $70 a month. That's how I look at my covered calls. And then if you want to know how much premium that is, we can base that on how much money we have in the trade. So if we literally just bought that 20 or 100 shares right now for $27.62 a share, that's $2,762, and we're going to make $70 on the trade. So $70 divided by 2,762, 2.5% trade right off the bat. Now here's another thing. Maybe you've owned SoFi for a while. Like my average cost on SoFi, I should hit back. My average cost on SoFi is much less than 2,700. So if you want to look at true return, we can do that. My average is 24.47 on SoFi. So I would take $70 and divide that by 24.47. So my actual return is 2.86%. So it's even higher because my cost average is lower. So that's how you average your return. I'm getting an average of almost 3% return on this position every single month. Now, like I said, these premiums aren't going to stay like this constantly every week, every month, every year, but this is what they're paying now. And then I'll show you SoundHound. I'm doing the same thing on it. SoundHound, I have an average cost of $12.07. And we come here and we're looking at pretty much $18, $19. And you can see that SoundHound likes to make these big gap ups and big gap downs, but it's been trending upward. Three months, $20 range is pretty much high side. Bollinger Bands, $19 we haven't gotten outside of. Upward trend, bouncing off the midline. Looks like a decent chart. Smidge of support right here. It's 1650. We could hold that. I'd sell puts at 1650 for a little bit riskier entry. 1550 for a better entry, and then 14s. You're probably not going to get much premium there. So if you're looking to enter this trade, if you're looking to enter it with an option, right now, I need to, once I get better at technical analysis, I'll tell you, I'll show you some different things, but what was I saying? Right there, that's actually not bad. That's not a bad trade for a week. Look at this. This is 1% premiums. Now I'll show you how to figure out these premiums. Soundhound. We just said, I gotta go back to the chart because I forget already. Where were we? Right here. 14, 14.50. Now, I mean, we could come back down here. I mean, it's possible. 13, 12 to 13 range for sure. That's definitely possible. But I think we're probably going to hold in this area. We can even look a little further out and see where it's been to see a bigger line. Yeah, 12.50, 13 bucks. We can even go back into the 14 for an entire year. I'd be satisfied with 14 being my lowest entry point back into here. I'd be completely content getting back into Soundhound around $14. You have my blessing to do that all day long. More not risky, more premium if you want to get in a little bit higher and you're fine with it. If you like the company and like where it's at, value wise, somewhere in the 15.50 to 16 range. I'd be completely content saying that. So 14 to 16.50 range for selling puts, or you can get in right now. But I like it better in that range. So let's go into the options. And what we're going to do is sell put. So this is what we're saying. We're going to put up the collateral for the money. So let's say we're going to do the $15 strike. And we said 14, 15, 16, somewhere in this vicinity between 14 and 16.50. It's pretty okay. Just kind of depends on your risk level. If you're not a risk on investor, come down to the 12 to 14 range. And you're looking at 7 to 13 deltas. Like, I mean, you can't get much safer than that selling an option. And there's still not bad premiums down here. You're still making over 1%. Because what we do is we take now, I mean, this is pretty simple. Just move the decimal point over two places. If it links up with that evenly, it's 1%. But what we do is we take the amount of collateral that we're putting up. So if we're doing the $15 strike, we'll take 15. I'm sorry. We take the amount of money that we make, the $29, and we divide that by 1,500. It's a 1.9% trade in 5 days. 5 days. I mean, 2% in a week on a pretty safe option. You could run your whole account on that. Now, I don't know if I'd run it on Soundhound because it still needs to have more reputation. This company is up and coming and it's doing very well, but it's still not an Nvidia or a Walmart or a JP Morgan. It doesn't have that much validity yet. So I wouldn't put your whole daggone account into it. But I'd be satisfied putting some percentages into this, several percent, 5, 10, for sure. Not advice. I do guidance. You choose what you want to do with your account. This is what I do with mine. But yeah, so I'm going to get back more into selling options because they're very profitable. A 2% trade, and this still has to come down $2. Let's see, what's $2? $2 on 17. SoundHound has to come down almost 12%. So you're getting a 12% discount on those shares if you buy in at 15. And if you never buy the stock, you're making a 2% trade on the week. Let's go with some bigger name stocks. I mean, we've got NVIDIA up here. So now we don't have to do selling options. We can do just straight up buying shares. And guess what? If you don't have $188 to buy an entire share, you don't have to. We can come up here, click on dollars, and you can buy as little as $1. I don't want to make that trade, but you can literally buy as little as $1. So don't let the price of the company fool you. We got to look for value. And I know what companies to kind of look for that are valuable. Even though I like AMD more than NVIDIA for the long term, NVIDIA is a spectacular company. And look at this. It's come back. Oh my gosh. And even in the last couple of days, yeah, that V-shaped recovery. Look at it. It's almost up $10 a share. Anyhow, let's check and see what's going on here. I mean, yeah, we got some volatility up and down, but over the last 3 months, we've got a low of 163 and we've got a high of 192. We're sitting around 188 right now. I like this 180 range. This 180 to 185 range. So let's go a little bit more advanced chart and see what we got going on. Let's also look at the last year. I think we've had some pretty significant growth. So obviously, if you can catch NVIDIA down here in the 145 range, ooh, that's a great place to buy it if it ever comes back in there. Sell your house and buy it. But anyhow, right now, over the last year, we got some pretty solid support here. Well, it hasn't wanted to dip down below there. I don't want to say solid support because we don't have anything to back it up back here. But we're bouncing off the Bollinger Bands at 192 over the 3-month chart. But we're also we're in a slight uptrend in the last 3 months. Trying to look at some lines right across because it's usually right there, that 182. I mean, it bounced right off of it, and that's the midline, and it's kind of running off the 50 a little bit. So it looks like we got some support at the 50. So over the next month, if you see, well, if you've got the money, if you've got 18 grand, I would definitely sell $180 puts on NVIDIA. I actually wouldn't even mind selling 185 puts on this, or buying shares around $185. So set a limit order for shares at 185 bucks, and then you're going to want to take some, if you want to take short-term profits, if you want to trade this, you sell it around $190 because it's been in a range of about $10 a share, $5-10. It's been moving up and down. So you can make a scalp, or a good entry right there is around 180, 185. But let's look at the chart. The options chain. This is an $18,000 trade, and this is actually for this week. Oops, it's calls, not puts. 180. You can make $400 in a week, $383. So 383 divided by 18,000. That's a 2.1% trade in a single week. So technically, I can take my account right now and sell puts on Nvidia and make more money selling puts at the $18 strike for 1 week than I make at my job. It would take $30,000 to do that. And yeah, I would be my paycheck entirely. So that's very tempting to do, but it also kind of destroys my entire thesis of wealth building over time and over the next 5 years, to where I build and stack more and more shares of MSTR. And as it goes up over the next 5 years, I have a significant nest egg that I now have more wealth than just getting that income. So, which one do you do? This is the path that I've chosen. And then as I make trades and as I get better at trading and as I implement my system, yeah, I want to. I just lost my thought. I just lost that thought. Um, Yep, sorry, I just lost that thought. It's gone. Anyhow, but yeah, you can trade shares, and I'm bad at it because I like options. But right there, I mean, yeah, just set limit orders around 180, 185 to get back into Nvidia, and then you can sell shares at 190 for a small trade. But we're also moving higher. This is the best chip company in the daggone world. Just keep stacking shares on this company. But yeah, on the shorter term trades, I'm trying to figure out how to identify trends. And we got the MACD down here, and from what I understand, I'm starting to look at this differently. Um, Need to be able to zoom in on it. Oh, there we go. It's a little better. Um, this is the zero line, and when it becomes above the zero line, it's in a bullish uptrend. And then as the MACD line crosses over, it also signifies a uptrend. Uptrend? Below the zero line. Yeah, when the MACD comes over the zero line, it's a general uptrend, and when it goes below the zero lines, it's a downtrend. And right here, it crossed it for like a quick second, but then it started. It didn't really know what it was doing, and then it started to come up here. And then, as you can see, then RSI never really got overheated over that 3-month period, so there was nothing that showed a reversal, and we were getting pretty far away from the zero line, not as far as we were here. So we cooled off. Looks like we're on our next leg higher. This looks like a bullish chart to me. And I'm getting better at charting, or we're not overheated on the RSI. I mean, we're not like low on it, but we're not overheated on it either. Yeah, Nvidia looks good to me. I think we're going to reach all new all-time highs. We're probably got 195, 200 incoming before end of year. Now, I don't know what kind of trade that is. We got $12 on 188. That's a 6.4% trade for the end of the year if Nvidia gets to $200. That's what I got price target on, just because momentum, good stuff, chips, AI. I mean, it's great. And I think earnings is going to do well, and this week should tell us, at least big banks. If big banks are doing well, consumers are doing well, they got money, money's being spent, we're good. Uh, let's do another one real quick because I'm trying to learn myself. At Google, Jiminy Christmas, Google's a good company. Yep. We were kind of right. Oh, I didn't mean to go in here already, but See, I gotta learn the monthly, the, the 3 monthly, the monthly, what it looks like, and I gotta set my charts up differently because I don't think this is reading exactly how it should. This is how I read puts and calls for the month, but I don't think this is how I should read a trade for the month. And look at Google. Google is in a downtrend. Like, wow, way under the zero line, and we're about to have a MACD crossover on this 3-month chart. And right here, we did this back here, and when we did that, we came up from 240 and went all the way to 250 as we came up above the zero line. So what I would do, this is just the month. Google had this nice spike up, and right here we've got support at 235. Not a lot, but some. Obviously, we can gap down. We can come back down into the 212 range. I don't know if we're going to do that, but if you're looking at it, 212 for Google for an entry, yeah, the 205. I like it better at 205 because that's old resistant. So if Google ever comes back down to 205, it's definitely a buy or below. And then I don't know where the 200-day moving average is, but we want to get close to the 200-day moving average. But on the short term, gee, many Christmas on the year chart, we're in a big uptrend. We're not crossing under yet. Over the last 3 months, we're in a downtrend, and it's really not been moving that significant. Well, I guess it did move. It's had a nice cool off. Google looks like a buy to me. We're down here at the bottom. RSI is coming up on the month and 3 month. We're bouncing off the bottom of the Bollinger Band on the month. Yeah, this 240 range is looking really good to me. I actually think that Google is a buy at 240. And then we're looking at, yeah, a 250 sell target on a short term. This could take a month or two. But I'm looking at Google at 240 and selling at 250. That's what I see. I don't know. This looks like strength to me. I don't know much about the MACD yet, and I'd like to get Shade's opinion on this, but we had a cross under. But we're not in the zero line yet. Bollinger Bands are tight. That means we're looking like probably a move one way or the other, up or down. But I guess we haven't really come out of the downtrend, but sentiment is looking to me like we're going up. If we go on a little bit of a shorter trend, I mean, that's a pretty far drop in a week. 250 to 232. It's an $18 drop on a 250 stock. That's a 7% drop on that big of a company. And on the monthly, it looks like we got the crossover. But I'm seeing a downtrend on it. But over the yearly, no downtrend. So I say bullish. This is what I'm seeing. I think next stop 250 and above. 250, 255 is my sell target. And you're probably looking at a couple weeks to a couple months. So $10 a share on a $240 stock. 4%. Looking at a 4% trade on Google. But let's look at the options. Oops. Yeah, we can go week out. What if you want to go month? We can too. What did we say? 235. I actually liked it at 235. Um, right there, 235. You're looking at 1.5%. I think. $363 on 23,500. Yep, 1.54% trade in a week. Now, if we go out monthly, like somewhere around 33 days, I'd go even maybe a smidge safer. Anyhow, if I like it at the 235 level, why not? And then on $23,000, I can make a grand in a month's time on $23,000 and buy Google cheaper than it's trading for now. We can even go down to the 835. So if we make $835 and we put up 22.5 in collateral, that's a 3.7% trade in a month on a huge company like Google. So if you got 50 grand, you can literally bring in about $1,600 a month right now selling options on Google. Now, if you want to be a little bit more hands-on and do it weekly, and if it hits, it hits because it's Google. And yeah, we can even play a little safer if you want. We can get 1% a week, but I'm liking the 235s. We're on an uptrend on the monthly, so we can take advantage of the premiums. We just turned, we just curled. So do at the monies. Slightly out of the money. I definitely agree with that for sure. If you got $23,500, you can make yourself $363 this week entering into this company all day. And like I said, if you don't want to do anything or if you're busy, do it on a monthly time frame. Make yourself $1,000 a month, call it a day on 25 grand. Now imagine if you had a quarter mil. Now you got $10,000 coming in a month on $250,000. Not even $250,000. 235,000. So if you need 10 grand a month and you got $250,000, you're good to go. All you got to do is trade Google. That's it. That's all you got to do. It's that simple. Let's go Meta. I mean, it's expensive. It's not expensive. It's a high priced stock. Do the same thing here. Last 3 months, obviously around $700. People really liked it. Tops around 790. So we got $100 range here. This low end, 720. We got a mid range, 750. Let's see what's going on here. RSI is pretty low, so we can definitely move up. Ooh, what do we got going on in a monthly here? Made a cross in there, but it looks like we want to try to curl. RSI is coming up. We haven't made the confirmation yet. And we still have all this upside. We have up to 790. We could even come down here like 770. So somewhere between 770 and 790 is a sell target for Facebook. First stop, 730. And then we're gonna have a little bit of resistance around 750. But yeah. Actually, I changed my mind. Sell target somewhere between 750 and 700 and 770. Sorry. That's what I'm seeing here. Let's see what it looked like over last year. We have had a cross under on the yearly chart. The last time we did that, it went from 700 all the way down to 5. It also dipped below the 0 line. Right here on the 3-month, it looks like we're about ready to curl. 700 looks like a great price for Meta, even 705. I'd sell 705 puts on this all day on the weekly or the monthly. Even at the money. I'd sell an at the money put on this. We're about to curl. I mean, Meta's a great company. Now let's see what the chart looks like. Or the chain, sorry, the options chain. So I said 700. Even at the money, somewhere between 700 715. We go puts. I know it says buy, but it's not going to change anything. Where we at? $1,200 a week on the $700 puts, $1,800 there. Now this is an expensive thing. This is $71,000. So if we go to this 700 strike, we're gonna make $1,213 off of 70K. That's a 1.7% trade. If we go at the money, we're gonna make 1885 off of shoot 71,500. That's a 2.6% trade. Now, like I said, I like it where it's at. Anyhow, since we're in the bull market, I like at the monies right there. So we're looking at $4,000 a month on the 71.5, 44.45. That's 6.2% on the month on Meta at $700 a share, where buyers showed up and there's a nice support. Next 30 days, if you need 4 grand, you got $70,000, you're good to go. Imagine if you had a $700,000 account, you could do 10 of these options, make $40,000 a month. On less than $1,000,000, you can bring in $40,000 a month. You just got to find the right companies with the right options and the right environments. This is finance and investing just Joey style, and I mean it doesn't really get any easier than that. If you're a high net worth person, if you got $1,000,000, we can find ways to bring in 10, 20, 30, $40,000 a month safe on good companies. So I'm telling you, stack these shares, and I'm going to start deleveraging a little bit. I'm going to play these out over the next couple of months, and we're going to go from there. We're going to see how this works out, how these play out, and then I'm very, very interested to see how these play out over the next 3 years. These ones I'll take profits on sometime in the next 6 to 12 months. And then these ones I plan on holding for a while. I might take some profits on some of them, but we'll just see how they work out. But I got high hopes for this company in the coming years, and that's why I have these options. And then I'll start playing some smaller things as I release some margin. So I'm going to need to start studying my charts to actually, you know what? Let's see if I can do one a little bit live with you on MSTR and actually pay attention to my covered call instead of and actually chart it out. If I sell a month-long covered call, geez, see, just 3 months ago we were at $457. But in recent times, We haven't wanted to get above 360. So we could probably get away with selling a 360 call option. Top side of the Bollinger Band, well, not currently, but even up here when its expansion was 370, bouncing off its Bollinger Band. But let's look at the rest of this. Where's the 200? I can't see it very well. Okay. We're under the 200. So the 200 is probably going to bounce right around 350. Or get above the 200 and we're going to break out. We had a curl under here. Let's look at the month or the year. Downtrend on the year. Bouncing off the Bollinger Bands. And yeah, this 260 level, pretty much 300. 300 is the bottom. Absolutely. I'd sell puts on this all day at 300. You got 30 grand at the money puts. Oh, yeah. All day. All day. We can drop out of it, but buyers are showing up at 300. Yeah, we're under the zero line. It looks like to me that that is almost curling. It wants to, but it hasn't yet. RSI is low. My goodness, this RSI is low. I don't know. This looks like to me that it's ready to pop. RSI is heating up a little bit on the weekly, but we could even, yeah. We were 360 a week ago. We were 360 a week ago. We can get back to 360 pretty quick. Now let's see if I can actually maybe even sell some covered calls on the week to see if they'll hit. So what I would do is I would go above the 360 strike and see where that puts me on a week. It's $80. Now it's not a lot of money, but less than a week ago we were there. Or what I could do is sell a little later one closer to the money at like 340. But everything's showing to me that we're kind of on the upward. I might want to play these on the dailies because right now I don't think it's a good idea to sell covered call. I think it's a great idea to sell a put though. At the money, 300 all day, 2,200 bucks on 30 grand. Yep. Also on the week, I'd sell the 300s too. I like this at the money. I got $1,000 a week on a $30,000 put. So find really good companies, do the wheel strategy, in and out, earn income, stack shares, wait 5 years, and you built one heck of a portfolio. So, oops. This is finance and investing just Joey style. And yeah, that's what I'm going to do. And then I'm going to learn how to swing trade a little bit better. Shout out to Shades. I know this video is way longer than I wanted it to be. And yeah, I understand that I'm a little bit boring sometimes. So I'm trying to get over that, but my life isn't where I wanted to be. And I'm, I'm getting excited about some things, but I'm sick of rebuilding everything that I built before. Not sick of it, just it's a lot that I got to do to get back to where I was, and I'm just pissed about it. But yeah, that's life, right? We can't quit, even though sometimes we want to. Um, but I'm not quitting. I'm right here in front of everybody showing exactly what I'm doing, and that I'm willing to learn, and I'm willing to show you that I might still make a mistake or two, but long term, stack shares, DCA, don't worry about trading, and you're going to be just fine.